Live from Sydney, I'm Paul Allen. This is Insight, where we dive deeper into the stories that matter with crucial context and sharp analysis. Well, Asian markets reel as global chip stocks tumble, with investors questioning the durability of the AI boom. Concerns growing over debt, positioning and demand. Oil extending a sharp retreat after President Trump says Washington and Tehran are talking. Traders weigh lower escalation risks against continued uncertainty. Markets are also bracing for pivotal earnings reports and central bank decisions. Investors watching the Fed as some on Wall Street predict a surprise hike. Tata Power is stepping up its growth ambitions after reporting higher earnings. We speak exclusively with CEO Praveer Sinha about their expansion plans. And Bloomberg gets you the inside story on how India's student protests forced a rare Modi retreat, culminating in the resignation of the education minister. Our top story today, a global sell-off in chip makers has deepened as investor sentiment continues to worsen over the sustainability of the artificial intelligence boom. Avril Hong joins us now from Singapore. So, Avril, the question is not is it bad, it's how bad are things looking on the markets?
Yeah, I mean, look at the region's benchmark, losses upwards of 3%, and AI jitters are being keenly felt in the Asia-Pacific, given the concerns resurfacing about the circular nature of AI financing, along with how we're seeing China seemingly making progress on AI development. And this is really hitting the chip makers in the Asia-Pacific after already the Philadelphia Semiconductor Index declined for a third day. The losses are intensifying in Asia. You look at the big three, Nikkei, Kospi, TAIEX, they are deep in negative territory. The circuit breakers were rolled out in South Korea. What seems to be helping on the margins a little, though, is what we're seeing in oil prices, with Brent below 87 now as Trump touts these talks with Iran. Now flip the board. When it comes to Nvidia, those concerns about circular financing, reportedly $750 billion worth of AI supply deals, 500 to SK Group, another 250 to OpenAI. And given how it might be taking stakes or financing companies or projects that use its chips, is raising the question yet again, how much of this is real demand? And you're seeing, against the backdrop of these reports, how the cost of hedging or helping to look at what we see on Nvidia's debt, that has actually surged. Now flip the board again, because when it comes to the US AI proxies and how they've been hit very hard in trade today, you think about, as I alluded to earlier, the progress that China is making on lithography manufacturing. Consider this as well, that within China, this could open up a pathway for creation of capacity, and that is something that could actually compress valuation. So we're also seeing the Chinese chip makers in trade today coming under pressure. Paul?
Thanks, Avril. And yes, right on time. South Korea's Kosdaq has now triggered the circuit breaker. Trading halted after that index fell by 8% as well. So trading in South Korea's Kosdaq now also in a trading halt. Well, let's get more details now on those stories fueling this AI angst across Asia. Our China correspondent Min Min Lo joins us from Hong Kong, along with Asia equities reporter Winnie Su. So Min Min, let's start with you. What do we know about the scale at which China can produce DUV machines? Because this has been one of the catalysts that's seen the sell-off today.
That's right. And this is according to the information's reporting. And according to their sources, China is planning to produce 5 of these machines this year and 20 next year. This is a particular company that is based in Shanghai. It has not been named by the information, but it's a homegrown company that is gathering expertise from other Chinese firms, including a state-backed startup as well. And according to the information, most of the components of these DUV machines are locally sourced, except for some key components that are coming from Japan. So this is sparking the sell-off because we know that ASML has been a major player, in fact, very dominant, one of the few monopolies out there in this sector. And ASML has been prevented from selling its most advanced machines to China. Now, mind you, these DUV machines are not top of the range. The most advanced machines that ASML can sell are the EUV, extreme ultraviolet lithography machines. DUV is deep ultraviolet lithography machine. So it's slightly less advanced, but still the vast majority of chips require only a DUV machine. Only a small sliver of the most advanced chips require EUV machines to make. So this is why we are seeing the market sell-off here in Asia as well when it comes to the Kospi, the TAIEX, and many of these tech names in Asia.
Yeah, so China making that entrance into the chip etching business. You mentioned ASML. What's going to be the market impact for not just that company, but also the broader chip making equipment sector?
That's right. We already saw the most immediate impact on ASML, right? Big decline yesterday in the U.S. session. And our analysts have estimated that if ASML truly loses all of its China business, this could represent 20% of its revenue loss. Of course, this is not going to happen immediately, but the implication is in the long term, maybe over the next decade or so, China's demand for these overseas chip making equipments, that could reduce drastically over the next decade or so, even though, according to our Bloomberg intelligence analysts, China is probably still maybe 7 to 10 years away from closing the gap with ASML. But we're already seeing not just ASML suppliers and then its downstream clients like SK Hynix and Samsung are badly hit as well. But even the chip packaging companies, the NAND memory makers like Kioxia are seeing huge declines as well. And that's because, again, the DUV chips are used for so many things, right, for the lower end chips. And they can also replicate what the higher end EUV machines can do as well, albeit at a more inefficient way. But being able to mass produce those machines really changes the cost environment for companies as well.
Yes, okay, so that's the first of a 1-2 punch for the tech sector today. I want to get to Winnie Su for the second one of those 1-2 punches. And Winnie, it's all about circular financing. I mean, Nvidia's announced a bunch more deals, financing and taking stakes in projects that are going to use its chips. I mean, there's been worries about circular financing for some time. Why has it all come to a head today?
Yeah, exactly, Paul. You just mentioned how actually we've been hearing about this since last year, but because of these concerns around the hyperscalers spending recently, that is really raising further concerns around this circulation that we're looking at. Now, it is all about how companies like Nvidia are financing the support for its key customers, and these customers then have further money or funds to then buy more from Nvidia. And some of the examples we're hearing recently is, for example, the one with SK Group committing about $500 billion between each other. So it is circulation because it includes SK Group buying these supercomputers from Nvidia, and then Nvidia also buying memory chips from SK Hynix. Now, this is a little bit unclear in terms of how this money is actually going to be divided. So that is why investors are a bit concerned in terms of how it's a bit less transparent. Now, when it comes to the deal or that talk that we heard from yesterday about them potentially backstopping about $250 billion for OpenAI to lease that $500 billion worth of data center being built out by SoftBank in Ohio. That is a bit more complicated with them providing that $200 billion to support the build out of SoftBank. And SoftBank has a big stake in OpenAI, and they really lease that data center to OpenAI. Then OpenAI, which is a key customer of Nvidia, buys further chips from Nvidia. So that kind of circulation is raising concerns because it potentially skews the demand and also raises the risk when it comes to a potential fallout of this whole AI demand story.
Yeah, well, Min was telling us about the casualties of the China lithography story. How are we seeing these circular deals being reflected in the repricing of assets in Asia today?
Yeah, definitely adding further pressure on top of what we are already seeing from these Chinese competition. Now, in fact, you did see Nvidia stocks falling about 5% yesterday, and it also raised the credit risk, right? Because the 5-year CDS for Nvidia, in fact, saw a record intraday spike yesterday, and that goes to show how investors are now trying to protect for that potential default when it comes to credit. And well, when we talk to fund managers, in fact, this morning, they are saying that the focus then for the AI-related equities is less about the upcoming earnings or even the capex expectation, but more about the expectation for the credit market outlook. And that is coming as these bond yields continue to spike in corporate, and that the capex is now outrunning what we see in the free cash flow, and that there is further risk when it comes to the balance sheets of these companies as well.
All right, our China correspondent Min Min Lo and Asia equities reporter Winnie Su, thank you both. Still to come this hour, our next guest says 3 key risks will take turns driving the markets in the second half of the year. SEB's head of Asia strategy, Eugenia Victorino, shares her outlook. That's up next. This is Bloomberg. Welcome back. You're watching Insight. President Trump says the US and Iran are engaged in diplomatic talks to end the Middle East conflict, but he's also warning that the two sides would return to fighting if negotiations didn't result in a deal.
They want to meet, and we're meeting. We'll see what happens. There's a chance we can make a deal. Without what we did, they wouldn't even be talking to us. They requested a meeting through their surrogates and directly. And we're meeting, and, good things can happen, I guess.
Well, let's get more details now with the Bloomberg Middle East correspondent Abu Abir Omar. Abu, what are you hearing in terms of what's happening in terms of talks? The president there saying there's a good chance of a deal. What does this actually mean?
Restoring price stability.
Well, so look, as you heard from President Trump just now, what he was saying about a deal being possible, essentially. But then he went back as well, and he did say that they were hitting them very hard, hitting Iran very hard, and that a deal could be possible. But then if they did not agree to the concessions that the U.S. lays out, then a deal follows. President Trump earlier or last week saying that a massive attack could happen in Iran. Now, if you remember, on Friday, the U.S. had paused 13 consecutive days of attacking Iran without giving any explanation really as to why that is. Axios did report, Paul, earlier in the week that Admiral Brad Cooper, who oversees the U.S. operations in the Middle East, had warned against further strikes because they're no longer effective. Now, this is Axios citing a source of theirs. And so we have all of this together. We have, from the Iranian side, a shape of a response. This is from Ismail Baqai, who is the foreign ministry's spokesperson, who said it's possible that mediators share messages from the U.S. side about current developments. So you can make of that what you wish, really. We don't have a lot of clarity on the situation or if actual talks, those diplomatic conversations between the United States and Iran, are actually taking place. And all the meanwhile, at the heart of all of this remains the Strait of Hormuz and the closure of the Strait of Hormuz. We know that the U.S. maintains its naval blockade on the waterway despite halting its attacks against Iran. And we know that Iran also maintains asking ships to ask for permission through the line or through the waterway that it dictated through the Strait of Hormuz. And so we have all of this. We have oil prices reacting to the somewhat positive news below $90 a barrel since or over the past 3 days or so. But for now, we don't have any signs of actual substantial conversations happening between the two warring parties.
And do we have any updates on what's happening on the other side of the Arabian Peninsula, in the Red Sea, where Yemen-based Houthi rebels were targeting that route as well? What's the state of traffic through there?
Yeah, that's another parallel war that's just emerged over the past couple of weeks or so, Paul. I mean, should I say, the war between Saudi Arabia and Yemen has been going on for about 12 years, but it's idled a little bit over the past few years or so, and now we're seeing those signs of aggression re-emerging. We saw signs of the Houthis, those are the Iran-backed militia in Yemen, attacking Saudi Arabia, attacking ships.
All right, that's Bloomberg's Middle East correspondent, Bia Abu Omar there. Let's get to our next guest now. Eugenia Victorino is head of Asia strategy at SEB. Eugenia, safe to say there's a lot of volatility at the moment. I'm wondering what's uppermost in your mind. Is it oil, AI, circular deals, potential for central bank tightening, something else, or all of the above?
I would say all of the above. At this point, there's really not much I can say except that I am cautiously optimistic. Well, in the middle of the summer trading months, it's really very difficult to find what is the dominant theme. But there are really three things that are taking their turn in catching the market's attention. And you've already mentioned them. It's whether the persistence of the disruption in the Strait of Hormuz will remain a problem for the rest of the year. Second, how will the central banks react? This week we have a heavy central bank week, and we don't really know whether any of them will surprise. Our view is that most of them will deliver hawkish, but maintain the stance, but market is trying to price in a little bit more. And lastly, the AI story. Market is not yet clear whether to follow the structural story or the cyclical story. So I would say cautiously optimistic, but let's see for all these drivers to come into play.
Does your cautious optimism extend to what we're seeing in the tech space at the moment? Because, we've got the Kosdaq in a trading halt. The Kospi was in a trading halt earlier. China's starting to etch its own chips. Are we looking at the start of, if not a bubble bursting, perhaps a big repricing?
Well, at this point, the structural story behind the AI-related investments is still very much intact. However, we've been on this cycle, or we've been on this news flow for a long time, and we have seen some broadening of that trade. And previously it was all about the Mag 7, and now we're actually seeing the growth or the rise in the price of the picks and shovels of the AI trade. The problem is the market also knows the cyclicality in the chip sector, and you cannot ignore the fact that they have gone through cyclical ups and downs in the past. But another thing that is complicating the matter is that we have a dark horse in the Chinese tech supply. And it's not about whether it's good enough, because everybody knows, or everybody is assuming, the Chinese tech in terms of chip production is still 10 to 15 years away. The problem is they are now able to do it mass production. So we're seeing the threat of a China impact once again. And that was not priced in by the market.
Well, let's look at the oil side of the story. Perhaps a good reason for cautious optimism here. The two sides talking again, a pause in the attacks, oil prices coming down. When you look at oil's impact on inflation, can we use that word transitory now? Do you see it starting to diminish?
Well, it really depends on which area you're talking about, because for parts of the world, you could see that the energy impact is really transitory. Whereas in Asia, the energy impact is not always transitory, because it actually sometimes leads to food inflation. So this is why the central bank reaction may actually differ. So it may be transitory for the US, and that may actually lead the Fed to ignore it. But for other central banks in Asia, it may not necessarily make them stop and wait and see, because it's already diffusing to other parts of the CPI basket.
Well, let's run through a few central bank options now. I want to start with the Fed. I mean, Citadel sees we might have a surprise hike, if not this week, maybe down the track. What's your threshold for rate increases and tightening from the Fed? Do you think it's going to happen this year?
actually, if you take out the energy component, you could see that the inflationary pressures in the US is actually diminishing. So I would say that if the Fed were to really focus on the underlying price pressures, there is actually less reason to hike this month if you compare it to the data that we were facing last month. So we've already seen continued easing of activity. We're continuing to see the labor market that's not adding to the inflationary pressures. So from the Fed's point of view, I would think that there is little reason to surprise the market this week. Having said that, their window to change the narrative is actually limited because while the central bank is supposed to be independent, well, they can't be so independent in the middle of an election. So we could actually try to ignore the meeting very near to the election because they are unlikely to move at that point. So they can change the narrative this week or maybe in the next meeting in September. But after that, it's very difficult to change the narrative.
Well, we have a Bank of Japan meeting this week as well, a hold widely expected. How long can the BOJ remain on hold, though? Particularly, the currency is not really their responsibility, but surely with the yen hovering around 40-year lows, the time to move must be getting near.
I think they have been behind the curve for a really long time. The question is whether Governor Ueda would satisfy the market in terms of delivering on expectations on a faster pace of tightening. So last week we had seen BOJ officials say that they are willing to take it a notch higher, but they have to make it clear that the next meeting would be August or September is actually live for tightening. Otherwise, the yen will remain under pressure.
And I have to mention Bank Indonesia as well after the surprise resignation of the governor for personal reasons. How are you reading that? Do you have any concerns over central bank independence in Indonesia?
Well, that's certainly a question. But given that the acting governor at this point is a career central banker, then that has given some comfort to the market. Having said that, she is operating as an acting governor. So unless we see a real institutionalized figure in the seat of the governor of Bank Indonesia, I would think it's very difficult to convince the market of the independence of the central bank at this point.
Eugenia, we're also hearing from the Reserve Bank of Australia Governor Michelle Bullock at the moment. She's speaking at a live event in Sydney right now. We did know the content of her speech just before she started delivering those remarks, and she is suggesting that, look, inflation in Australia is still uncomfortably high. The RBA prepared to increase the cash rate further if needed. Key words there are if needed. Do you think it's needed?
I think there is still room for at least one more hike because at the end of the day, the inflationary pressures were already there even before the disruption in the energy flows in the Strait of Hormuz. So even if the US and Iran do engage in another agreement, which is always at risk, then Australia is still dealing with domestic price pressures, which justifies further tightening in my view.
All right, Eugenia, thank you so much for your time today. That is Eugenia Victorino, Head of Asia Strategy at SEB. While we were talking, we did have South Korea's KOSDAQ resume trading after that circuit breaker was lifted. Hasn't really improved the matter. We're still off by 8.1%. The broader Kospi, which also had a trading halt triggered earlier in the day, down 9.3%. And it's those big names, SK Hynix, Samsung Electronics, suffering a lot of the beating. We do have the Kospi, as you can see, heading back down towards 6,000. This is just a few weeks after it topped 9,000 in June, so a huge reversal underway. Well, our next guest says Southeast Asia's growth story has diverged, with some economies benefiting from the AI boom, while others struggle with the fallout from higher energy prices. HSBC's Yun Liu up next. This is Bloomberg. Well, welcome back. You're watching Insights. Oil's recent slump should provide some reprieve for Asia's emerging markets, but that's being offset by the selling in tech stocks. Domestic concerns for some ASEAN economies could also prove to be near-term headwinds for local currencies. Avril's back with a look at Southeast Asian currencies. Avril.
Yeah, Paul, we're seeing one particular currency in the spotlight this week, certainly the Indonesian rupiah, that is not far from record lows. And this is continuing to weaken just a day after the sudden departure of Bank Indonesia Governor Peri Warjio. Now, we've already heard from some of these ratings agencies, including Moody's, talking about the possibility of more volatility when it comes to capital flows and the rupiah. And of course, this is coming at the time where investors were already concerned, given how the central bank was coming under pressure to align itself more closely with Prabowo's growth agenda. And investors are certainly going to be watching for clarity on the permanent appointment of who the governor for Bank Indonesia is going to be. As you well know, the deputy senior governor has been taking over that role as acting governor for the time being. Now, aside from the Indonesian rupiah, we're of course watching the Philippine peso as well. We did see recently when oil prices resurged that it hit fresh record lows. Today we're hearing from the BSP governor talking about how the peso's fall could also cause inflation to rise, that we could see a big inflation impact in 2027 and 2028. And he also not ruling out aggressive tightening. He sees a chance of that. And of course, this is coming at the time where domestically the corruption scandal has raised a lot of concerns among investors. That has also led to a crimping of public investments. That's of course a key driver of growth in the Philippines. The Philippine president, though, speaking in his annual address, saying that they're not going to spare anyone, even close relatives, and pledging this anti-corruption crackdown. So as I said, these domestic challenges could be compounding some of the concerns for ASEAN central banks. And of course, this is coming in the week where the Fed is expected to deliver a hawkish hold. Paul?
All right, Avril, sticking around for our next conversation. We're going to get more on the outlook and risks for Southeast Asian economies with Yun Liu, senior ASEAN economist at HSBC. Yun, thanks so much for joining us today. And I do want to start in the Philippines. Avril talking there about that upcoming crackdown on graft from the president. Look, notwithstanding the difficulties of actually making this happen, is there any meaningful signal here for markets or investors?
Yeah, so we are seeing quite a lot of challenges in the Philippines economy here. You know, if we look at inflation, it is actually has the highest inflation print in Southeast Asia. And then if we look at growth, really growth slowed quite significantly. And a lot of it is because of the fallout in the infrastructure spending here. I mean, you know, the president himself gave this the annual SONA yesterday. And among his speech, I mean, what I'm looking at here is really he has introduced, you know, some tax incentives and also some of the measures here to mitigate on the inflation front, because I do see that the number one or the very primary risk here for the Philippines economy is really the rise in inflation here. There's still a lot of volatility and uncertainty in the energy market, and not to mention that, you know, El Nino, the arrival of El Nino, it will also likely bring higher food prices, which the Philippines is not immune to. And actually the Philippines probably in terms of the inflation risk here, it really has the highest risk in Southeast Asia.
Yeah, the highest risk perhaps, but not the only risk. I mean, inflation's not a unique problem to any of the ASEAN economies, or probably any global economy at the moment. So when you cast your eye across those ASEAN member countries, which are the most exposed to the inflation story and which ones are tackling it the best?
Yeah, so in terms of the inflation prints here, the Philippines obviously has the highest one, given its very heavy dependence not only on oil and gas, but also on food. The second, the one that comes next here is Vietnam here, also very sensitive to any volatility in the international commodity markets here. I mean, I think, you know, for Thailand is actually quite an interesting case. The energy shock actually has elevated Thailand from, deflation addition to inflation as well, are also very, very sensitive to international prices. I think Singapore and Malaysia actually have relatively speaking, have the lower prints here, but for different reasons. I think for Singapore here is also because of a lag impact. We are going to see quite a significant rise in inflation in the second half here. For Malaysia, it's probably a different story, and Malaysia probably enjoys the best inflation story in Southeast Asia, and that's because Malaysia is able to provide the very generous subsidies, especially on petrol, RON 95. It remains at 1.99 ringgit per liter, so that really shields on a lot of the energy impact here.
Aside from how it's managed to sort of tamp down inflation, Malaysia is also interesting, along with the likes of Singapore, because they've been benefiting from the AI boom. Yunyu, I wonder what's your assessment of, given how we're seeing this turn in the markets as far as the AI trade is concerned, is there any risk to the sort of data center or electronics investments that have gone into these economies?
Yeah, I mean, the market has keep talking about this AI boom, and obviously data centers is quite important, for Malaysia, and that spill over from Singapore to Malaysia, and it's been a story that we've been following quite closely, for the past 3 to 4 years, and I do think there is quite an interesting trend here, or quite interesting observation. I mean, despite the energy crises, the ASEAN growth fundamentals it shows a mixed picture here. So the outperformers, including Malaysia, Singapore, and Vietnam also, the commonality of all these countries is really because they have been benefiting a lot from this AI booming trade here. I mean, especially for Malaysia and Singapore, if we look at their current account balance, Malaysia and Singapore actually are the only two economies here that saw wider current account surpluses in the first quarter data. I mean, we're still waiting for the second quarter data to come up, but it just shows you, how much they have benefited, and they're pretty much on the front line to benefit from that, that chip story. So we actually have published our report, and the title is called "Whoever controls chips controls the trade." So it's quite an interesting scenario here when we look at how the AI scenario has literally just reshaped Asia's economic dynamics here.
So am I right to say that you think these AI investments are still intact and continue to benefit the likes of Singapore and Malaysia, in spite of what we're seeing, these concerns in very, very choppy stock markets?
Yeah, I think that's fair to say. I mean, if we look into data, I mean, the trade data still remains very resilient. If we look at, the CapEx, the U.S. Big tech giants CapEx this year and next year, they're also going to hit record high level. So whoever are in that, or whichever economies are in deeply in that supply chain, they will likely to benefit. And in this part of the world, in Southeast Asia, Malaysia and Singapore definitely stand out.
Yunyu, what about when it comes to politics in Malaysia? We've just come through the Johor state elections. Negeri Sembilan's one is next. Talk to us about whether you see any risks for the path of reforms.
Yeah, I mean, so the election cycle really here is quite very much the topic in Malaysia here. The Johor election is done, and then the Negeri Sembilan election is just going to come out over the weekend. And I think there will also be, Malacca and the Sarawak state elections coming up in the next few months. So everything putting together, I think they will likely affect the timing of the general election, which needs to be called by December 2027. That being said, I think it's also quite important, the election uncertainty. I mean, this is not new for Malaysia. It's pretty much the case for across EM countries here. We see that sort of uncertainty and concerns when it comes to the election cycle. But I think for Malaysia, it's quite important to look within its economic fundamentals, which actually have been very strong, which have been an outperformer in Southeast Asia for the past 3-4 several years. And a lot of the reforms in Malaysia, regardless of the election, I think they have been institutionalized. So, for example, if we look at the fiscal commitments, the Fiscal Responsibility Act requires the fiscal deficit to be cut to 3% of GDP by 2030. So I think that institutionalized reforms can give some comfort and relief for investors.
Yoon, just quickly before we let you go, I'm curious about your US dollar outlook, in which ASEAN currencies face the risk of the greatest depreciation. I mean, we did hear from the Philippine Central Bank governor earlier today saying it had intervened in the market in small amounts. Do you anticipate more of that?
Yeah, so I think this rising inflation concern coupled with depreciation pressure in some of the ASEAN currencies here, really they have led to probably more hiking bias across Southeast Asia. But again, it depends on where we talk about. So we expect, 4 countries' central bank to continue hiking: Singapore, Vietnam, Indonesia. But then, say, for example, for Thailand and Malaysia here, we expect the central bank to stay on hold. So it very much depends on the idiosyncratic factors and the economic fundamentals of each economy.
All right, Yoon Liu, senior ASEAN economist at HSBC, and our very own Avril Hong. Thanks to both of you. Well, Tata Power's net income beat expectations in the first quarter, rising 11%. Up next, we'll speak exclusively with CEO Praveer Sinha about his outlook for India's power demand and the energy transition. This is Bloomberg. Welcome back. You're watching Insights. Bloomberg has learned that India's former education minister had offered to step down on the same day that students and police clashed in the national capital. But sources say the Home Minister Amit Shah told him to stay in the job. Dharmendra Pradhan finally stepped down 5 days later. India government reporter Sudhi Ranjan Sen joins us from New Delhi with more on this scoop. So, Sudhi, do we know what pushed the government to ask its minister to resign?
Well, it's a couple of factors that came together. As our reporting shows between myself and my colleague Santosh here on the ground, Dharmendra Pradhan offers to resign, and the government stays adamant, thinking that they will be able to get over it. But what happens after that is several factors coming together all at the same point of time. One being the spread of the protest. It started spreading from Delhi across the country to other major cities and towns. And that is important because there are several critical states or key states which send large number of lawmakers to the parliament that goes to elections next year to choose their local government. So there was a point, the spread of the protests kind of started worrying the BJP and the government. The other critical issue that came together is that the government has several serious legislative agenda lined up. And for that, after the win in West Bengal, eastern state, where the BJP has won for the first time, the opposition was splintered. The assessment within the government was if the protests were allowed to continue, the splintered opposition would be forced to come together under the weight of the protests of the youngsters. So all these factors coming together forced the government to kind of retreat and say it's better to give in now than to allow the protests to grow and increase the problem that they have at hand now.
So this was the rare ejection of a Modi cabinet minister. To what degree does this set something of a template for the opposition when it comes to pushing back against the Modi government?
Well, it does set a template for the opposition at one level, and it doesn't at another level, because much depends on how the opposition is going to, organize itself, get its house in order. What has happened is the sheen of the Modi government, the fact that the Modi government was very proud that it doesn't need to sack ministers, that it can, brazen out, protests, brazen out opposition, is gone. It is clearly had to bend to protests, have had to bend to youngsters who were not organized. This was a very organic protest that forced the government on the back foot. Having said that, now the ball is in the opposition's court. How does it organize itself, and does it have the same kind of resonance in the issues that it takes up from here on to get so many people on the ground, or to get so many people to back it? So that is where the key lies.
All right, Bloomberg's India government reporter Sudhi Ranjan Sen there. Thank you. Let's take a look at the market open in India. Been up and running for about 2.5 minutes now. Checking on the rupee first. It's seen some of its best gains in a month. This is for a couple of factors. We've had a softening oil price, which has helped the rupee. Also some intervention from the RBA propping up the currency. Kind of flat across most of the market in India at the moment. The Sensex barely moving. But the Nifty IT sector better by 2.25%. Infosys had a very good day yesterday. We also had a number of earnings out. Coal India profit a beat. Hindustan Unilever, Tata Capital are going to be reporting today. We'll have June industrial production numbers as well. Now, a couple of stock-specific stories to take a look at. Let's check in on HDFC. The bank's board issuing warning letters, also opposing fines on 3 senior executives. This is after a review into the bank's arrangements with the Maharashtra State Road Development Corporation. The board's saying that look, this wasn't so much misconduct as more business overreach. We've got stock in the bank just off by a few points. Tata Power, meanwhile, down about 0.25%. This is after first quarter net income actually beat estimates, coming in 11% higher on year. However, costs also increasing by 8.4% on year. Joining us now exclusively is Tata Power CEO Praveer Sinha. Mr. Sinha, thank you so much for joining us today. Just want to start with that headline number. Net income up 11%, narrow beat. What were the key drivers of the profit that quarter for you?
Good morning. It's such a pleasure to be on your show. I think Tata Power quarter numbers are very good. But what we need to look at it is that how this has been consistent for last many years. This is the 27th consecutive quarter in which we have shown increase in revenue, EBITDA and PAT. And this is on back of a very strong foundation of our all businesses. And I think we will continue to do good in future quarters. So typically what happens is the first quarter is little muted. And what you would see at the end of the year is not just what we did in first quarter into 4, but maybe 4.5 to 5 times. So that's the type of opportunity and growth that we are seeing for ourselves.
Well, costs have also been rising, and I'm wondering to what degree a weak rupee has been impacting your coal import costs. What are you doing to manage this, and what are you doing to hedge against the weak currency?
So our coal import, everything is hedged. So the time we place the order, we hedge it. So we don't have any issues as far as we are concerned as a company. Also, our coal cost is a pass-through. So we do not have an impact on that, and we are able to take care of this in the tariff that is charged to the consumers.
Well, you're also diversifying into renewables increasingly. I want to get to that in a moment, but I'm also interested in your nuclear ambitions as well. It's been a few months now since a new nuclear law was passed. Can you talk to us about your ambitions in that sector?
So on the nuclear, we have been working with the government for last, I would say, nearly 2 years, and as a result of that, the new law has been passed. We are now expecting the nuclear rules to be cleared, and the objective is that the nuclear rules will give action to what sort of licensing will be done and what sort of approvals and consents. Also, in terms of technology transfer from Indian companies, especially NPCIL, they have the traditional 220 and 700 megawatt units. Also on the fuel, how do we get uranium on a long-term basis and ensure that the prices are stable for that. So I think there's a whole lot of action that will be required going forward, and we expect that to be taken care of when the nuclear bill or the rules are notified by the government. On our part, we have already identified few sites, and we are carrying out the geotechnical studies over there. So once we get the new rules, we will apply for that and go ahead with the implementation of the project.
Are you able to tell us any more about where those sites are, and do you have a timeline for breaking ground?
Those sites are in the states of Maharashtra, in the states of Madhya Pradesh, Odisha, and Gujarat. We do expect that the whole approval process will take about 12 to 14 months. So what we can expect is the early part of 28 we'll start possibly the construction activity. And these projects normally take about 48 to 54 months. Though in of government projects, it takes a little more time. So we are targeting that 2032, 33, we will have the first of the nuclear plants ready in the private sector.
Now, in terms of renewables, I know you've had a few projects delayed because of issues with transmission. I'm wondering if you can update us on that, and also update us on your plans to export solar equipment to Europe.
So we have been setting large number of utility scale large solar and wind projects in the country. We had planned that in the first quarter we'll set up 700 megawatt. We did complete 230 megawatt, but another 500 megawatt, which was ready from our side, we had completed everything. It could not be commissioned because the transmission line got delayed. I understand that within next 1 week, nearly 300 of that will get commissioned. And within next 2 weeks, the balance will get commissioned. So I do expect that all 500 will be commissioned much before 15th of August. We expect over and above this 500, another 400 to come in this quarter. So we have a very strong pipeline. We have nearly 5.3 gigawatt of pipeline, out of which nearly 50%, 2.5 to 2.7 we will do in this financial year, and then in the next financial year.
Praveer, very briefly, 30 seconds. I'm just wondering if data center, the AI build out, is that affecting any of your spending decisions at the moment? Very quickly. We are already with some of the data centers in India. And, there's some coming up in Mumbai, Navi Mumbai, some in Hyderabad and Vizag. We are part of those data centers in terms of talking to them about supplying them clean energy. And I do believe that many of these data centers will be deemed distribution licensees, so we can support them as a distribution company. So we will offer them a total integrated solution to data centers so that all their power requirements can be met from our side. Fantastic. All right, Praveer Sinha, MD and CEO of Tata Power, thank you so much for your time today. Before we go, quick look at tomorrow's show. We're going to speak with BlackRock's head of global fixed income for Asia Pacific, Naveen Sehgal, about his outlook. This is Bloomberg.